Cybersecurity continues to be a top concern for companies across the country. Of those types of events, malware represents 43% of all attacks, and of that, ransomware accounts for 95%.
According to a recent article in the Wall Street Journal, the percentage of insurance income, which would be the insurance sector's premiums they receive from claimants, which would be you, rose to 73% in the past year alone. Managed service providers are amongst the hardest hit, and the same article actually highlighted that MSPs that were previously only paying $2,300 a year are now paying $7,500 a year. And in another instance, one organization that was a small MSP that was paying $13,000 a year had their premiums skyrocket to $48,000 a year. If you're watching today's session, then you're probably interested with the Cybersecurity Maturity Model Certification, or CMMC, and how cyber insurance may or may not be playing a critical role, and how you, as an organization seeking certification, may be looking to reduce your risk exposure from a cyber incident.
Hi, my name is Felicia.thorpe. I'm Managing Advisor at AHT Insurance. I'm a corporate insurance broker who specializes in government contracting and technology companies.
My name is Carter Schoenberg. I'm the Vice President of Cybersecurity and also the Chief Cybersecurity Officer with SoundWay Consulting. We are a CMMC accreditation body approved registered provider organization and also a certified third-party assessing organization, or C3PAO candidate. Throughout the course of today's session, you're going to have the ability to be able to ask us questions, and throughout the course of today's presentation, we'll be responding in kind. And with that, we'll go ahead and we'll get started. So, Felicia, I think what might be of value for the people that are attending today's session is if you can maybe just give some of the background, the evolution of cyber policies in general.
Yeah, absolutely. So cyber policies began as professional liability policies for technology companies. Essentially, if a person was on site or working with a client and they created a scenario in which there was a breach for a third party, they were able to sue that entity and the policy would respond. What's happened over time is we've identified that almost all companies in today's environment have a technological component.
Sure.
So at this point, we now have the ability to provide coverage so that if you, as an entity, provide or cause a breach for a third party, you have coverage. Beyond that, as a first-party response, if you create a breach for your own entity, you're not having to come out of your operating expenses. You now have the ability to transfer that risk to a cyber policy. These policies have been in existence for probably 10 to 15 years, and have evolved over time. So now you're seeing better first-party response coverages, whether it's crime coverage, whether it's being able to provide forensic investigation, credit monitoring, business contingent interruption. I mean, it really has evolved over time to provide a comprehensive coverage for entities.
No, so that's a great starting point. So one of the valuable lessons that even SoundWay went through recently when we actually had to test our incident response plan, and the harm trigger got to the point where we said, okay, we're declaring this a cyber incident, and we're going to go ahead and explore how is our insurance carrier going to be able to provide this coverage. And in the scenario that we had utilized for that test, there was actually damages that we had internally and also damages that we had caused a third party. What was interesting for us to learn is that the cyber insurance coverage that we had at that time would only make us whole for our own operations. It would not address the third-party exposure, that the third party would actually have to, for all intents and purposes, initiate civil litigation against us for that coverage, which would have been under our general liability policy to be able to pay out in that. So the benefit of having first and third party damages in one single organization, one single policy, makes perfect sense to me.
Absolutely. And the way that this can be structured or how it can be designed, there's numerous ways that you can construct this. What we're looking at is for a tech company, your tech errors and omission or your professional liability really should be encompassed in one location. So that way, if you have a breach, you're going to get the third party coverage. If it's damage to another person or entity, And then you also have the first party if it's your own company. I think that there are some crossovers that we've seen in the past that just make it a little bit more of a streamlined process to have the same carrier executing on your behalf.
Now, at the onset of today's session, you made reference to how pervasive ransomware is.
Yes.
And that is obviously front and center for most organizations, whether government or industry. But obviously the kinds of harm that in this case, an organization seeking certification, defined as a commercial enterprise that's looking to do business with the U.S. government, can be exposed to is not limited to ransomware. So we have seen on multiple occasions just through SoundWay's clients scenarios where it wasn't ransomware, but somebody was tricked into doing something, monies went out the door, and then you have this, well, it's not technically a cyber thing, nobody forced you to do it, therefore it's not crime.
They call that voluntary parting.
Voluntary. That's a nice professional way of looking at it. So I'd love to be able to hear from your background and experience some of the scenarios that you've encountered with your clients.
So what you're describing is called social engineering. It's essentially an orchestrated effort in order to get somebody to voluntarily part with either data or tangible items. That tangible items most times is money. So what happens is, even though they access the information through what's considered a cyber event, they've either gotten in through a back door, or somebody didn't change their password, and so now they're sitting on your network. When it comes to data, you can always identify data as being equal to a cyber policy. So if they stole W-2 information, if they got tax documents, then that's when we would look to the cyber policy to see if social engineering, that's the sort of official name for what that is included on there. If it's a tangible item, or in this case, again, it's most likely securities or monies, then that's going to be looked at under your crime policy. Now, over time, like I said before, these have been evolving over years, and because there's a cyber component to how they're getting into the system, a lot of the carriers have now started to add social engineering as an option underneath that cyber policy. So one thing to really consider is that if you have this type of event happen, you look under your crime policy, you look under your cyber policy, and then you look to see what that limit is. In some cases, I have clients who have it both places, and that's been a really good base for them, because you are limited to the amount of limit they're going to provide for you. It is the expectation of the carrier that your accounting team has provisions in place to prevent you from handing over large amounts of money. We all know that in crunch time, when people are backs against the wall, they make decisions that they normally would not make. And even though it's against protocol, they might part with monies above what that limit should be. So you really just kind of have to look at what can we do from a risk mitigation standpoint to try to make sure that we don't exceed the limits that are offered to us.
No, great points there. So one of the challenges that, at least that I've seen for a number of years, is that the insurance sector took a position of, you know what, we're going to ask you 10 binary questions, and based on your responses, and it's literally yes or no, we'll issue you millions of dollars of coverage, and here's your premium, and call us when something goes wrong. And now the data is supporting that as a result of this, the volume and the velocity of the claims that have been coming in, that premiums are going up significantly, and that the underwriting process is providing a lot more scrutiny to the applicant. Can you maybe expound upon that a little bit more?
Yeah, I mean, let's go back a little bit and just, give an example. When you started doing insurance like hundreds of years ago, it was like, okay, we're going to get fire insurance. Well, at the point today, we have 100 years of data in order to help the actuaries and the underwriters make a decision on how much this is going to cost. With cyber, we really had nothing. And early on, a lot of those actors were targeting small amounts of money because, A, it's underneath the deductible, so it's unlikely people are even going to report it. And then B, it's easy to just blast it out and say, okay, I'm going to send 1,000 different organizations a request for $2,500. I mean, even if 10% of those people respond, that's a fair amount of money. So the bad actors were happy and the carriers were happy because there weren't really claims at play. What happened is now the bad actors are recognizing, well, wait a minute, if we get a hold of sensitive data or we get a hold of their network, we can now essentially extort them for millions of dollars. We can have one target, and as we saw earlier this year, it was 1 week it was $20 million ransom paid, the next one it was $40 million. That's a big chunk of change.
Sure.
So with an increase in these claims coming about, ransomware and of course myriads of other types of events, we are now seeing data that the underwriters can use to evaluate what they think they should be charging. What they have found is it was significantly undervalued at the time that they were just sort of passing out all of these policies. And also they recognize, well, it may make sense for the companies that we're insuring to take a stronger position to strengthen their cyber posture. So they are asking for a lot more information and validation that the companies they're working with want to do the right things.
Okay, no, great stuff. And it's one of these constant challenges for organizations where, to quote Mike Tyson, everybody thinks that they've got a plan until they're punched in the face.
Yeah.
And like one of the outcomes that we had even from our incident response plan test was, obviously, in addition to what you have electronically, having a paper copy is going to be critical, because guess what? If your system's compromised, you're not going to be able to get access to it. And in addition to where your incident response plan is physically being kept, whether it's hung up on by a push tack or whatever, I would also even suggest that you have your insurance policy in print right next to it as well. Again, you always want to constantly check, well, not like weekly, but at least annually, is the information still accurate and correct? But again, time is money, and for each minute, each hour that's being burned and trying to figure out, well, who do I need to call? What's the appropriate extension? That person's no longer there. Who do I need to talk to? These are all things that allow the adversary to have that much more time in your network to cause and expand upon that initial level of harm that they originally had introduced. Maybe, since we're talking about like first and third party damages, right now where I could see a challenge is for prime contractors, and when the prime contractors are going after work and they've assembled a team of, let's say, 5 subs.
Right.
Regardless of socioeconomic and size and stuff like that, where out of these 5, contestant number 2 is actually being defined through the forensic examination as the one that actually was patient 0, caused harm to my organization, which subsequently caused harm to my government client. Based on your experience, what kind of guidance are you giving primes to kind of address this type of threat?
So first and foremost, of course, the government contracting companies I'm working with are looking to be compliant. So DFARS or FAR, do we have the limits? Mm-hmm. We go through that and we talk with them about that, but of course their actual exposure and the liability that they're responsible for in the instance of any type of cyber event far exceeds what is required. And in the instance of cyber, most of those contracts don't have anything written in, and it's not part of the FAR regulation. So what we'll look at is you need to make sure as a prime you have the type of limit that it's going to account for the exposure at hand. Okay. And then you need to look at those 5 individual subcontractors and say, what are they responsible for? What kind of data? What kind of numbers of records? And then what kind of coverage do they have? They need to flow down so that in the instance that patient 0, which is subcontractor 1 or 2 or whatever the case may be, you're able to subrogate against them. And all that means is in government contracting, time is of the essence. If there needs to be a response right away, you need to use forensic investigation to figure out who was responsible, that your carrier will respond, and once we find out who patient 0 is, you can subrogate, or then your carrier will go after their carrier to make you whole. Because the last thing we want is you as the prime having any type of exposure or liability that's against your policy. And once you have a loss, it stays on your loss history for 5 years, which means for the next 5 years, your underwriter is going to be taking into consideration what action happened and how much they had to pay out.
So let's talk about that a little bit with regards to having the ding on your background for 5 years. How frequent is it with this uptick in payouts that companies are saying? Or I should say, companies that are being underwritten are saying, you want to raise my premium to what? and they start to shop it, and then the other insurer that is looking at them doesn't have that level of visibility in terms of what happened to them. Now, granted, they're going to ask, have you ever had any claims in a certain number of years? But is there any real level of initial due diligence that the insurance sector does to validate that? Because, with insurance, like car insurance, they already have access to your driving records and things along those lines. So it would stand to reason, at least at some point, that there would be a claims repository that anybody would be able to, if you're trying to underwrite a client, would be able to have access to.
No, absolutely. So let's say that you're in a situation where you've had a claim and now the premium goes up. I never recommend that we immediately go to market to see if we can find better pricing because of a claim experience and an increase in premium. In actuality, the longer you're with a carrier, it tends to correspond with easier claims payout. So you got to think about it from the standpoint of, if I'm the carrier and you're my client, you've been with us for 5 years, I've received 5 years of premiums from you. So when I get a claim in and I'm paying out, I'm using a table to kind of say, like, all right, yes, you've paid out, but look at what we've gotten, and continue to be able to provide better ratings. If you go to a new carrier, they get the loss history. They require, as a part of them providing a quote, the loss history, and that's going to come from the existing carrier. So there's not a way to fudge that number. They're going to see, okay, they've just had a loss. What have they done to rectify it? What risk mitigation strategies have they put in place? And again, if for whatever reason I have a client who had a claim and they want to move, whether it's claims experience or maybe they just didn't like the carrier, I now have to put together an entire story to present to another carrier to explain to them, yes, they have this black mark on their record, but here's why they're a great risk. At that point, that new carrier takes them on. They're going to be much more stringent about how they're looking at the claims, and if something else comes in and they've only gotten 1 year of premiums underneath their belt, understand that that's almost an immediate red flag for them to say, okay, either we're not going to renew this because now they've had that claim and now we've had another situation, they're not doing the right things, or percentage-wise, it's going to go up in terms of premium significantly more than if they had just stayed in place where they were at.
Now, if you think about, like, when we're talking about like prime contractors, notwithstanding like the Raytheons, the Boeings, the Northrop Grummons, but if you look at the lion's share of government contractors that are going to be acting as a prime, to your point, your recommendation is that that they are instructing that their subs to understand that they're going to have cyber liability coverage that's commensurate with X. Do you feel that even those organizations are mature enough to understand? Because if I've got a team of 5, how do they even determine what is an appropriate level of coverage?
So with all of my clients and their subcontractors, we're looking at what type of information do they have access to, what type of access do they have. I hear all the time, well, it's in the cloud. In the cloud is a great place for things to be because it's not in your own network. So 100% I agree that's a good place to be, but that doesn't exonerate you from having access to information or even knowing that there's a possibility that you could be responsible for the breach. So we're looking at number of records, type of records, how many employees are working on this project, how many have access to the information. And then we kind of build out, we actually have a tool that we use to say, okay, let's say worst case scenario, you've got payment credit card and HIPAA information and this number of records. We can kind of put it in and say, all right, it looks like it's going to probably be $1.5 million, and that's for this one situation. So we can look at it and say with some experience in the space where we think the limits should be.
Now, I've seen on past applications for cyber coverage questions that pertain to do you maintain, store, transmit credit card information? Do you maintain, store, transmit personal health information? Do you envision, or is it already there, where they're asking for, do you maintain, store, transmit controlled and classified information?
So I have not yet seen carriers who are requesting that information on the applications as it sits today. What I have seen is an increase in number of supplemental questions that can come out, or, and this happens all the time, they're asking for something on an application. I create an entire submission. It's not just the application goes over to the carrier. I want that carrier to know the procedures, the protocols, the number of people who are addressing these issues, and also they're not asking on an application, are they CMMC certified? But I want the carrier to know that.
Yep.
So we've kind of create a situation where we're giving all of the information, and there could probably be 3 or 4 times out of 10 where we get questions back from the carrier. Those are the type of questions where an underwriter might dig deep if they don't feel like the questions or the submission that I put in really answers all they want to know.
Gotcha. All right. No, great. Thank you. Do you envision that, because I know sometimes carriers will look at things where, have you been independently certified for an ISO or a SOC 2 report of compliance?
Right.
Do you envision where having within CMMC, whether you're certified level 1 or you're certified level 3, will be a considering factor in policy and premium determination?
Yes. Simple answer is yes. I think anytime you have a certification that is specific to the cyber health of an organization, some of those things can be, commercial government contracting. What I found is that they may not get as granular as understanding what the government's doing, but when you're in this space, you're in the area, you're doing CMMC, the underwriters in that industry understand what it means. And so when we see those questions on an application, we will expand upon it, or your broker should expand upon it in order to let them know what CMMC means. From an application standpoint, I'm seeing more specific questions asked, and those specific questions may be things that are like sort of a absolute in order to get your CMMC. So it'd be easy to be able to just check the box and say yes, CMMC, and know that these 16 things are now addressed.
Exactly.
But realistically, the applications still have those 16 things.
Okay. Now, one of the other things that was coming to mind as we were discussing this is, earlier you made reference to when you have a policy and you have that harm trigger that goes live, you have what, for people that may not be familiar, the panel. So the panel is this, think of it as the invisible team until you need to have them, that will include forensics, marketing specialists, HR, breach notification coaches, things along those lines. But because of the nature of the government contracting community, do you see provisions between the insurance and the organization seeking certification that will stipulate, if X happens, only U.S. citizens, they will have national agency checks, things along those lines, because the organization's still going to have to notify the Department of Defense or the adjoining federal agency as it applies, and I could see where you let who touch your system?
Oh, for sure. For sure. In fact, I want to go back a little bit. You were talking about an incident response plan. As part of the incident response plan, and we actually sit down and do tabletop exercises with our insured so that we can start to identify where they have areas of concern that are specific to government contracting. If you had a forensic investigator come in, it is likely that they are not cleared. So we have to, before the situation, identify those providers who are, they're not always needed to be approved by the carrier, but some of them will have like, hey, here are people who do a great job, and that way they're already vetted. We have to go through beforehand and we'll say, who are you going to use for forensic investigation?
Yep.
How many of your contracts require clearance? How many of these providers have clearance? Whether it's public relations, whether it's forensic investigation, breach coach, it really can touch on all those pieces. So that incident response plan becomes even more important in the face of having some clearance issues and sensitive information.
Oh, that's great to know. As we start to conclude today's session, I think it would be of value for those that are attending today's session, when you have a prospect, an applicant looking for coverage, what are some of the, let's say, security controls that you are saying you should do or you must do for me to even have this discussion with you?
Right. So I will tell you, it seems obvious, but it's not always, that just having simple cyber health is going to be what allows for you to even get considered. So it's making sure you fixing patches, passwords are updated on a regular basis. I mean, I think anybody in cybersecurity will tell you that's a large amount of how people get into the systems. Beyond that, the number one thing that's coming up is multi-factor authentication. I have had several companies who are in the process of putting it in or had not, but were considering it, and we actually had to go through a process with the carrier to get approved, because that's almost the barrier of entry at this point. We need to make sure that you get the low-hanging fruit to even get the quotes. Then to get the advantage of getting fair pricing, you need to make sure that you're taking it a level up. And I have tons of clients who are fairly large in terms of middle market that are still employing third-party entities to come in and do a check of what their teams are doing, making sure that the CISOs and IT directors have somebody who's on the outside looking in to make sure that they're not created in a vacuum. These plans can oftentimes, you think that you're doing the best there is and not know that something else might be being hatched across seas or wherever these new attacks come in, and it's hard to be on the defense all the time, especially when you've got strategy at play, which is oftentimes what happens with the internal tech team.
So there's always people talking about, like, the human being is always the weakest link in the chain, and I think it's also important to understand that there's always the buzzword of the insider threat. And what's important, I think, for everybody to understand is the data that really does support that the highest percentage of cyber incidents are associated with an insider. However, having said that, the majority of that percentage are generally unintentional. But at the end of the day, the damage to the company is still the same. Are you seeing the insurance sector also asking for things such as, can you demonstrate that you're providing consistent training?
Yes, training is huge. It's making sure that your employee population is educated continuously and consistently. There are, like I just mentioned, there's an evolution to how these things are happening. And you probably know better than I do. You never know what that next threat is going to be. So you can't just do an education course over the course of the first quarter of a year and think that your employee base is now well equipped to identify any potential breach. So having, like our internal IT team does a really great thing where they will push out an actual attack, and then we have to identify it. And if we do identify it, there are some benefits and perks, and so people are always on the alert. And I think 9 times out of 10, it's just our own internal organization doing it, and it puts us in a place where we're looking forward to it because we might get a Starbucks gift card. But it's just the incentive that's needed in order to keep the employees protecting the organization.
No, great stuff. So the nice thing about everything that you just outlined is actually within 800-171 and CMMC, especially at level 3, the majority of everything that you just outlined and then some is already there. So by default, if you have a CMMC certification, like you said, it would be nice if you have a certification that that the insurance sector has 16 items that they would normally check, and you could say, well, they have this, so by default, boom, all is green. So great stuff. Do you see that premium values, they've obviously have gone up considerably recently. Some data points are showing anywhere from 20 to 50%, and based on some of the figures that I showed, called out earlier, 3x. So do you see this as it's going to continue to be a gradual progression, or do you think that just because of this current state and how pervasive cyber attacks are, that companies should expect 20-50% premiums year over year for the next several years?
So this current year is a representation of actual data that the underwriters have to now do a better job pricing. I would hope that we don't see 20 to 50% year over year for the foreseeable future, but I do think that we are writing the course of what it should have been priced at, probably to begin with. So I'm looking at, government contracting technology companies. I have seen, 20 to 50% is sort of on the conservative side. So I have seen some really big increases. And when I haven't, I've really had to dig in deep with the underwriter to understand what's happening so that we don't end up with surprises in the following years. So I think we are looking at a correction in pricing model.
Okay.
Depending on the level and severity of claims throughout this year and next, it will probably do a little bit more to help us identify whether or not we will continue to see those increases. I don't think it's stopped. I don't think it's a matter of, we got a 50% increase this year, next year it's going to be flat. The general insurance market has hardened. That means all carriers, all lines of coverage have seen an exponential amount of growth in claims experience. And so they've had to offset that with increase in premiums. That has continued through tech E&O, through cyber, through professional liability, and I think we'll see small increases probably for several years to come. It's just my hope that we're not going to see 50% this year, 50% next year. So if everybody who's watching this takes an active role to protect their cyber health, then we will probably see lessened increases.
Well, that's good to know. Within CMMC, I've heard time and time again, well, the cost of ownership for being in conformance with CMMC is too overly burdensome, and I'm not going to do it, and maybe I'm not going to be supporting the U.S. government any longer. I could also see where even if they say, well, okay, I want the business, I'm just going to suck it up, I'm going to become CMMC level 3 certified as an example. But I could also see where, well, the cost of the premium versus what I believe, although probably misguided, the risk is, it's just too expensive to have cyber insurance. Is there an opportunity in the marketplace where maybe joint ventures can be created? And just my lack of experience, how does insurance address JVs? Is there a mechanism where you could have a very large, robust organization and they've got cyber down pat, and they're more than happy to pay for the coverages, and where those coverages could then traverse over to the JV'd organization? Any thoughts on that?
Yeah, so it just really depends. For me, I get a lot of JV requests from my organizations. I've had some where both clients were mine, and then some where it's one or the other.
Okay.
And essentially, until it's populated, they just cover it underneath the majority owner in a lot of cases, because otherwise you just have this insurance sitting over there but no actual work. At the point that it becomes populated, it is always my recommendation for the JV to have its own coverage. What typically happens is it has to hit a certain revenue threshold, and then once it's making positive money and gains, then they'll start looking at how they're going to do that insurance on its own.
With regards to that revenue threshold, is there like a scope? I mean, like, what would be a range based on your experience?
Well, if you're asking me, I say as soon as there's any dollars assigned, I would say, hey, listen, both parties, you guys should really come together and create a suite of insurance policies for this JV. And that's because, especially if my company is the majority and there's revenue being attributed to both entities, they're now taking on active exposure that is not really solely their liability.
Sure.
So I like it at the point $1. It just happens that from a financial standpoint, most of the clients will say, okay, we need to feel comfortable at a certain dollar amount to start attributing its own insurance, because a JV can be added as an additional insured for very little additional premium, sometimes not even any. So everybody's looking at it from the standpoint of, yeah, but we don't want to pay out money where we don't have to.
Sure.
My problem is, let there be one claim, and now one of these entities is far more invested than the other.
Sure. Great insights, and thank you very much for the information. To learn more about how H&T can help you with your insurance needs, or how SoundWay can help you with your cybersecurity needs, please feel free to contact us at the information at the bottom of your screen. On behalf of SoundWay Consulting, I'm Carter Schoenberg.
I'm Felicia Thorpe. Thank you so much for joining us.
Thank you, everybody.